Welcome back. All markets are a bit Twitter because of an unscheduled meeting announced by the Reserve Bank of the Monetary Policy Committee. They're going to meet on November 3rd. Now, I wanted to bring your notice to the press release. It clearly says that this MPC meeting on November 3 has been called under two sections. One is 45ZN of the RBI Act and the other is Regulation 7 of the MPC regulations. Now, what does 45ZN say? 45ZN got added only in 2016 to the RBI Act. This is the act which set up the MPC. Now, the 45ZN says if the MPC fails to get to the mandated, inflation figure of 2% to 6% now, then it will call the meeting and write a report. It will write a report to government explaining why it failed, what measures it is taking, and by when it will come back to target. Regulation 7 says much the same thing. If for 3 quarters the MPC does not get to the targeted, mandated inflation, it will have to write a report to the government. A meeting will have to be called. So this meeting has been called under Regulation 7. Nevertheless, the market is worried. It's an unscheduled meeting. It comes a day after the Fed FOMC meet. So can there be an unscheduled rate action as well? Sajid Chenoy, the Chief India Economist at JP Morgan, and Soumya Kanti Ghosh, Chief Group Economic Advisor of State Bank with us. Sajid, I'm starting with you because you were in the Urjit Patel committee which actually designed the MPC. So what should we expect from this meeting? Is it only to write that report?
Morning, Lata. I think you've answered your question in the introduction. I think it's very clearly laid out in when the meeting was called that this has been called under Section 45ZN and Regulation 7. Remember, Regulation 7 says that the Secretary shall convene a meeting of the MPC under normal process to discuss the report that has to go to government. That report has to go within 1 month of when the inflation target is deemed to fail. Remember, the 9 months from January to September meant that the September CPI printed on October 12th. That means the report has to go before November 12th. And therefore, I think this is largely a formality, given the timing that the MPC is meeting on the 3rd of November and has to send that report before the 12th. The fact that it is happening the morning after the Fed, I believe, is purely coincidental. So my reading of this is very much, this is when the MPC will decide on, what it sends to the government and the 3 parameters that you laid out, what the reasons for the failure were, what remedial actions are being taken, and what time frame the MPC will bring inflation back into its target range.
Okay. Well, a similar question to you, Soumya. Good morning and thank you for joining us. I already have your report, and in your report, you are saying very much what Sajid just said. Do you also think that the markets need not worry about a rate action on November 3rd?
Yeah, thank you, Lata. Good morning. No, I think I share the same views with Sajid, and you also actually laid out the facts very well at the beginning. So the report has to go by November 12th, and the meeting which has been convened on November 3 is a pure coincidence. But let me add one point also over here. I think in the past also, whenever an unscheduled meeting had taken place in RBI MPC, that was in, I think, March 2020 and May 2022, it was never announced earlier. The outcome was announced after the meeting was convened and the result of a rate cut in both the rate cut and a rate hike was declared. So I think whenever an unscheduled meetings take place, and if it is given under Section 45ZN and Regulation 7, I think it's clear that the purpose is to define and draft the report to say that why the RBI may have, why the inflation target may not have been achieved and what is the remedial action. So I think from that point of view, we should take this as an ordinary meeting where the outcome will be purely a discussion of the inflation, not targeted the target. And also, please note, it's a one-day meeting. It's not a three-day meeting.
Yeah. Soumya, I want the equity markets to hear this loud and clear. And why? Even the debt markets. There was this odd voice worrying whether this unscheduled meeting, because it is after the FOMC meeting, can say something. Our experts have reiterated it is only to draft the report to the government. And I also want to add, the Reserve Bank has frequently said, reminded us that they decide their monetary policy with respect to domestic events only. And an FOMC meeting will not, be a moving factor, much less to call a special meeting. Therefore, I think that fear has to be disbanded. But Soumya, Do you think the little weird public, the governor said in the last press conference that it is privileged and therefore RBI will not release it. You expect government may release it?
No, I think it's a discussion between the government and the RBI. And another interesting Lata point is that the RBI actually in the last currency and finance report, which was published, I think, in 2021, where the RBI had said that instead of 3 quarters, why it is not made 4 quarters. So I think from that point of view, if I take that factor into consideration, and also the fact that it's a matter between, everyone knows that we have gone through COVID, which was an unforeseen circumstances. So I think this report is just a discussion on why it has not happened. And I don't think that this report is likely to be made public. Maybe the contours of the discussion may be discussed at some point of time, but it's unlikely to be made public at this point of time.
Oh, that would be very unfortunate as per my view, because there will be a lot of speculation on what was said in the report in the first place. Sajid, any thoughts? Will it, should it be made public?
Lata, let me say that de jure, this is the prerogative of the RBI and the government, but de facto, there's going to be no surprise in the report, right? Let's look at the 3 parameters that you laid out. Why inflation has missed its target. Look at the unprecedented confluence of shocks that all central banks have had to confront in 2022. Everybody's missed their inflation target, right? Advanced economies, many emerging markets. And the fact is, at least till February, the RBI had thought that inflation in FY23 would be 4.5%. Market expectations were higher. They were closer to 5%, but nobody expected inflation to average 7% before the war started. So really, it was the confluence of a pandemic and a war and the terms of trade shock from commodity prices that have been responsible in part for this.
Sajid, if I may interrupt. Sajid, if I may interrupt. Why they could not get to the target of 6% is perhaps the most easiest thing, because that's past tense. But look at the third point. They have to say by when it will come to target, not come under 6%. Target is 4%. I would die to read that paragraph, wouldn't you?
Right. So, Lata, 2 things again. I was going to come to the second and third part. I would say as important as by when it comes to target is the remedial action, because the remedial action will tell you, when it's expected to come to target. And I would agree, I would argue that remedial action started 6 months ago.
Yeah.
The minute the RBI figured out that inflation was going to be close to 6% or higher than 6%, we had that intermeeting hike in May. We've had 3 successive 50 basis point hikes, June, August, end of September. The MPC is still saying we're withdrawal of accommodation, suggesting more hikes on the anvil. So on the second point, my sense is the report will say remedial actions began 6 months ago when the world changed.
Exactly.
Now, and when it comes to target, again, the last bulletin of the RBI, which was released 2 weeks ago, laid this out quite well, that there are 2 milestones to the achievement of the target. The first milestone is to first bring it down into the target range, because inflation failure is not a failure to be above 4%. The failure is when you go above 6% for 3 consecutive quarters. So the first achievement is when do you bring it down below 6? Now, the RBI has reiterated time and again, if you look at that inflation forecast, that they believe this is going to happen Jan to March. They have inflation forecast as 5.8 for that quarter and 5.2% for all of next year. I would argue that an upside risk to Jan to March, perhaps we end that quarter on average above 6%. But most market expectations are that FY24 inflation will be somewhere in the 5.5% range. So again, there should be no surprises about what the RBI will say.
Sajid, you're not answering my question at all. I think C is the most important. I mean, their target is 4. They are nowhere near it. If they are going to say that they're going to reach 4% in 24-25, that's a serious failure, isn't it? And it contrasts very sharply with what Dr. Verma is saying, that in his minutes he says he wants it at 6%. He doesn't want a hike beyond that. Shaumya, I mean, don't you think that this should be released? And if it is going to be 4% after 23-24, that's a mark of failure. I mean, any thoughts on that?
I think getting to 4%, I mean, is always the ideal objective, but one should understand that it is flexible inflation targeting. So basically, you are targeting inflation over a business cycle. So at this point of time, I think the immediate priority is to get it down below 6%. That should be one of the steps which the RBI could actually identify. And getting to 4%, I think, is over a 2-year period. And I'm not sure that at this point of time, when there are so much global uncertainties, coupled with domestic uncertainties, I think things have not normalized. Whether it will be a correct proposition to identify that this is the time period where they can actually get down to that target. Because that's why I think that's the beauty of this entire targeting framework, whereby you are working with a flexible targeting across a business cycle, which could be volatile at any point of time.
So both of you will condone if they don't reach 4% next year. Fine. I just want to know what is your own target in terms of the 4%? Sajid, you don't see it in 23-24.
Well, the RBI is telling us that inflation forecast for FY24 is 5.2%. So clearly the target will not be reached in 5.2%. Now, I agree with you. So let me make 2 quick points. I think the lesson from the last 2 years has been, given this world we live in with multiple shocks, it's not good to keep inflation close to the upper end of the band. You know, we averaged almost 6%, 5.8 between Feb 20 and Feb 22. And then when you have another shock, it pushes it above 6%. So I would argue that we need to be much closer to the middle of that band. So if you have a shock, you don't get thrown above. But Lata, to be fair, given the confluence of shocks we're facing, it's like asking the Fed, can you tell us for sure when inflation is going to come down to 2%? No central bank can give that guarantee. It won't be credible in this environment. What's important, therefore, is not the target date. It's the remedial actions. It's important that the RBI continue down this process so that inflation expectations are anchored and you're on a glide path to get to 4%.
Fair point. Gentlemen, out of time, but if and when the report becomes public, I will have both of you and others to tell us what you make of the institution of inflation targeting and where inflation is headed. Thank you very much for joining me. Wrap up on Bazaar. Chartbusters up next.